we usually come into play with insurance companies in the beginning of the ratification process. So just want to hear it kind of from your side. So like, when should people contact you? How does that play? You know, some people call it homeowners insurance. There's hazard insurance. Okay,
the mortgage industry calls it hazard insurance. We call it homeowners. It's exactly the same thing.
So when you're a homeowner, you're buying a hazard.
Yes, it is exactly the same thing. So that does confuse people a lot, because they get the homeowner's quote and they're like, "No, this isn't what I need." And I'm like, "No, it is. This, trust me."
Right.
So yeah, it's exactly the same thing.
Right.
I would say that the sooner the better that they contact us is helpful, just because it takes one thing off their plate.
Right.
I mean, there's so much going on. If you're moving, whether you're selling another house or moving from an apartment or whatever, you're still moving.
Right.
And you've got the lender asking for documentation, and you guys still probably need things signed. And there's inspections, and there's all this stuff going on. So the sooner you can get this one thing off your plate, the better. But if it's last minute, we can do it.
Right.
If I have the details I need, which is the mortgage clause, loan number, date of closing, and the address, your date of birth, and your name, I can get you a quote and have you have the insurance piece done within half an hour.
Oh, wow.
So I've had people going, it's 5 days before closing, and the lender's going, "I still don't have this from you."
Right.
And call me up and go, "I need insurance, I need it now," and we get it done.
Right.
So we can do it, but I think it's easier and less stressful for the consumer if they take it off the plate sooner.
Right.
So, yeah.
Is it an application that they can fill online, or it's literally something that they call you and you ask these questions? And
State Farm does have the ability to do it online and then select the agent that you want it to go to.
Okay.
I think for most people, they find a benefit in actually talking to the agency.
Right.
Because we explain what all those coverages that you're selecting are, and maybe select some coverages that you're not selecting, why you might want to consider them. So I think talking with a professional in the field who can go through those things and explain to you and help you understand what you're buying and what you're paying for.
Right.
And maybe what you're missing, versus people that just go in online and try to fill it out, and they don't always know what they're looking at, and they're just looking at the price, but the price might not be giving what they need. And then we also run into a lot of times that people go in and put something online, but then the lender comes back and goes, "No, that's not enough coverage."
Right.
Whereas typically we get it because we know what the lender's going to expect. We know how we have calculators that we can put in the details of the home, when it was built, what it's made of, how many floors it is, what the floors, whether it's hardwood floors, carpeting, all these different details about your house to come up with what the house probably needs to be insured for.
Right.
Versus sometimes people go online and put in just a random number, or they put in what their purchase price is.
Right.
Which we don't insure the land.
Right.
So you don't need to pay the purchase price. You just need to pay for what it costs to build the structure.
Right.
So they get this number that doesn't make sense to them, and is not needed. So we encourage people to call us, but it is available online.
Right. And I think this is like across the board with professionals. I think like with lenders too, people will go online, they'll see like a teaser rate or something, and then they get the final rate once they've pulled, and it's like, wait a second, this is
what
not,
I signed up for.
Yeah, so I think it that kind of transcends a lot of different professions, like understanding what you're getting for what you're getting.
Buying a house is one of the most expensive things you will ever buy.
Right.
So, trying to do that yourself, and in terms of the insurance, because if the house is destroyed, you want us to pay for the entire replacement cost, not a portion of it.
Right.
So I think really going to someone who has been in the industry, understands what is and isn't covered, and can help you with those things is better than going, yeah, that works.
Right, yeah, I think that. So so you call your team and say, "John, I need insurance. I'm buying a house.
Closing on this date." And whether that's a investment property, so a rental condo or a rental dwelling, a house, a structure, single family house that's being rented, or whether it's a condo or a home that you live in, we can do all of that.
Okay.
So yeah, call us up, buying a house, I'm closing on this date. We'll ask for is your date of birth and the address, and we'll get you a quote. We'll work the quote up based on usually tax assessment that we can find online, or an MLS listing.
Right.
The details that are in there from the MLS listing. Once the appraisal's done, we may pull some information off of that to kind of tweak it if the square footage was off, because sometimes the county's not quite right. The county didn't count the basement, and the basement's now finished. So we'll go tweak it if we have to from the appraisal. But then we ask you for your lender's contact information. We contact the lender and get the information we need to finalize the documents. It really, we try to make it the easiest part of your own buying process, because we want it to be you've got enough to worry about. You
Yes.
want it to be short and simple. I just need your name, your date of birth, the address of the property you're buying. Give me your email. We'll send you the quote. We'll call you and go through the quote with you. If it looks good, we contact the lender, get everything we need, and take care of the documents they need.
Right. Well, and that's where we can, as real estate agents, like we can just send over. I've sent the tax and the MLS just to kind of help the process be seamless, kind of in the background. So, is there ever, when they're asking for birth date and things like that, are you pulling like a credit history on the individual as well?
It doesn't pull a credit history in the traditional sense,
right?
That like a lender would pull a credit. I don't get a credit score or anything like that. It does pull a credit history though, which does go into rating.
Right.
Again, I don't get any of that data. It just tells me that you're either eligible or not eligible. We also look at a loss history with that information. So it looks at, does the property address have a loss history, or do you have a loss history?
5 years from now, how do we know that that's actually going to cover all of that?
But that's why the inflation guard is in the policy to bump it up, and also that's why I recommend redoing, meeting with the agent and going over the coverages every couple of years to keep up with it.
Okay.
So what we do, we look at it a couple of different ways to try to figure out how much, because there's no exact science to how much coverage you need,
right?
Until something catastrophic happens, and then the last check is written to put it back.
Right.
So you really don't know. There's no way. So we use all the tools at our disposal. We look at county records.
Right.
The county records I don't use specifically for the structural amount, more for what they're saying the land is worth.
Got it.
And we back that kind of out of the purchase price.
Right.
We use our estimating cost guides where we put in details. When was it purchased? What's it made of? How many square feet is it? Is it what is the construction custom built, premium, above average, standard, or economy built?
Right.
And then specific features like what percentage might be hardwood floors versus tile or marble, things like that. What are the exterior walls made of? Is it brick? Is it hardy plank? Is it vinyl, aluminum, whatever it might be? So we put as much detail as we can into that calculator. Again, that's only data in, data out kind of thing. It's only as good as what you put into it. So, but that comes out with a number based on specific areas, specific zip codes, as to what the cost of construction is in that, and the details we put in. Okay. So we use that, what we pull from the county, and then what we can pull from the appraisal. Okay. To kind of come up with the best number. Right. We also kind of look at an average cost per square foot to build in the area. So average for this area is about $150 to $260 a square foot. But that depends. You go to some houses and they're $200 or $300. Some in McLean and Great Falls might be $400 or $500 a square foot. Right. Just really depends. But on average, you're in the $150 to $160 range here. Okay. You go out maybe further, like some places like Herndon or even further out, might be a little bit less. But on average, you can kind of work with those numbers to say, okay, my total square footage times this cost to build. But then we take that number, plus what we got from the county, plus what we got from our calculator, plus what the appraisal said. And if they're all kind of in the same ballpark, we know we've got a pretty decent number to work with. Got it, yeah.
And then do the rates go up each year automatically, or is it depending on?
It depends. Okay. It depends on a couple of things. So there is an inflation guard in the policy. So the coverage amount does go up a little bit every year. And I do recommend people review their policies at a minimum every 2 years, preferably every year. But at a minimum every 2 years, because in some periods that inflation guard that's automatically built in. So the policy coverage amount is going to go up. And that's covering things like labor cost. Materials cost of lumber went up, so now we've accounted for that and we've put more coverage on your house. But there's been times where that inflation guard that's automatically built into the calculations was going up faster than inflation was actually raising the cost. I mean, you saw that a lot between like 2007, and so what we recommend is you do look at it so that you don't have that, because obviously if we're giving you more coverage, there's going to be a slight increase in rate. Right. Other factors, if you had a claim, that could change your rate. Right. There could be rezoning in our calculations of the zip codes or the area where you live because of claims experience overall, because insurance is based on the law of large numbers. So it's basically everybody puts money into the pot, and so but not everybody has a claim. Right. So this area may have more claims than this area, but all that money is just going into one big pot. But this area is going to have a higher rate factor, a base rate factor, basically. Right. So we do recommend you look at it because the rates can change and can go up. But if you keep up with it and monitor it, things like discounts could change. Right. Sometimes they go up, sometimes they go down, depending on the company. So you do want to kind of review it every couple of years just to see kind of where things are, see if there's other discounts that are now available, other coverages that are now available. State Farm just in November released 5 new endorsements if you're Airbnb in your house at all. there's now an endorsement we can add because you don't have coverage if your Airbnb and they do damage, unless you have the endorsement. A home systems protection coverage, which is somewhat like a home warranty. We have a service line coverage, which covers the lines coming into your home, which are not covered by the standard homeowners policy, so gas lines, water lines, sewer lines. You can now add that as an endorsement. An adult, if your home is like, we had an adult daycare, but now we have, or we had a daycare, now we do adult daycare as well.
Oh, interesting.
So lots of different endorsements that come and go. We're contacting all of our customers right now to let them know as our policies renew that that's available to them. But you don't know, so it is a good idea to review to see if there is, because some agencies may not be reaching out and saying, hey, these new things are available if you have interest.
Right. So you're suggesting like within 2 years, looking at if it's escrowed in your mortgage, take a look to see how it's where it is in terms of year over year, and then just calling you or texting, email, whatever,
review
and
your
then just
declarations page, review the coverages, review the endorsements.
Okay. And endorsements are just
added things.
Okay.
So I'd say an insurance policy works like a parking sign in DC.
Okay.
You can park here, but you can't park, so that's the policy.
Right.
But then the exclusions say, but you can't park here during these times.
Right.
And then endorsements say, but you can park here during these times if.
Yeah.
So if you have this endorsement, the things that were excluded are now given back.
Okay.
So there's the policy, the exclusions, which takes coverage away, and the endorsements, which give coverage back.
Okay.
So I recommend that people review those and understand what they have.
Right. Because endorsement to me means like Nike's like sponsor me and I get like a lot of free stuff. Yeah, so that, okay. And then do endorsements usually have like a period of time that, because it sounds like there's endorsements that kind of come into play and maybe go out of play, or no, once you signed up,
So the policy, so if a company did take an endorsement away,
right,
they would have to notify you in writing.
Okay.
But most of them, they enhance rather than take away. For example, our cyber event and identity restoration. We've had that for several years. It was $25,000 in coverage, but with the new endorsements that came out in November, we changed that. It's the same price per year to get the coverage, but we moved it we added the cyber event portion to the identity restoration piece, and we upped the coverage from $25,000 to $50,000. So most of the time, they don't completely take away endorsements. Right. They enhance them and make them better or add new ones.
Okay. Yeah. So so you have a claim or you don't have a claim, then you go in. You get the insurance. You have to pay for the hazard insurance or homeowners insurance right then?
Typically not.
Okay.
It depends on whether you're escrowing it through your mortgage.
Okay.
And what we see a lot is I end up explaining to a lot of people what escrow is.
Right.
They don't
understand.
They don't understand what it is, or the lender hasn't explained it.
Right.
So we end up explaining that a lot. That essentially, they're going to collect that money at closing, typically. If you're escrowing the insurance, if you're not, the lender's going to ask for an invoice, a paid invoice. Right. In which case you'd have to pay us up front before closing, and we would give them a paid invoice. But if you're escrowing it, which in most cases people are, I think a lot of lenders charge an extra rate or charge a fee if you're not escrowing it. So most people do. They collect the first year's premium at closing, and they send that to State Farm. Okay. And that pays your policy for the year. And then in each of your subsequent payments to the mortgage company, they're collecting 1/12 of next year's premium. Right. And so when the bill comes due next year, you get a copy of the policy, but it says it's not a bill, it's billed to the mortgage. Right. We're also sending a copy of the policy and the bill to the lender because they've got that money in escrow. They're holding that money because they've collected 1/12 of it for the last year, and they pay the bill.